You ever feel like there's some invisible hand pulling the strings in our economy? Prices rise like balloons, your mortgage payment feels heavier than your paycheck, investments wobble like a drunk on ice, and you're left whispering to yourself late at night, who's really in charge? Welcome to Epic Spotlight. I'm Dante Royster. And today, I'm going to introduce you to the dragon in the room, the Federal Reserve. It's not some shadowy cabal in a smoky back room plotting against us. It's more like the referee of the entire financial game. Since 1913, its job has been to tame the beast of the economy, to keep us from overheating or burning us alive. And the weapon it wields? Not a sword, not a law, but the single most powerful invention of modern civilization, the cost of money. But here's the mistake most people make. They think this is Wall Street's problem. They think it's just numbers on CNBC. That's wrong. It's your family's chance to buy a home. It's your shot at financial freedom. Every single syllable Jerome Powell utters in Wyoming ripples down to your mortgage payment, whether you're in Naperville, Orlando, Houston, Denver, Baltimore. Let me tell you how I first felt this dragon breathe fire. I was sitting in my office in Brookfield, Illinois, December 2022. It's wintertime in the Midwest, the kind of winter where the snowflakes stick to your eyelashes. The phone was ringing with clients. On my desk was a loan file for a young couple, first time buyers. They were nervous and excited at the same time, their whole future wrapped up in whether they could afford this house or not. I remember looking out the frosted window and thinking, why does their dream hinge on something Jerome Powell said 48 hours ago in Jackson Hole, Wyoming? The husband called me, his voice tight. Dante, the Fed just raised rates. Does this mean we can't buy? I paused. I could hear his wife in the background whispering, but also crying. They had already picked out their daughter's bedroom, and I felt it. This mix of anxiety and anger. Anger that their life's biggest decision was at the mercy of interest rates. But I had the responsibility to inform them because they had trusted me to guide them through the storm. That night, I stayed late. I pulled every lever, called every contact, ran every scenario, and finally I found a way. We locked the loan, saved the deal, and the next day they signed their contract. That's when I realized the Federal Reserve isn't just some abstract institution, it's not a headline, it's the air we breathe in real estate. And my job? To help people breathe through it without choking. So, what do you do about it? If you're renting, you're already paying someone else's mortgage. Rates may feel high, but rents are adjustable every year. Your landlord is the Fed in disguise. Possibly buying a house fixes your biggest cost in place while building equity. If you already own, refinancing might feel counterintuitive right now. But here's the secret debt can be reshaped, restructured. Lowering your monthly payment or consolidating high interest debt can change your cash flow and protect you from financial stress. If you're investing, don't just look in your backyard. The best deals may be across the state lines. Long distance investing isn't a gimmick, it's a lifeline. The Fed may raise rates nationally, but real estate is always local. Smart investors pivot where the numbers make sense. Now, I know what some of you are thinking. Maybe I should just wait. Maybe next year will be better. But let me ask you, better based on what? The August 2025 U.S. payroll report showed non-farm payrolls increased by 22,000. The unemployment rate rose to 4.3%. The weak report indicates a slowing labor market. Now, if the report would have shown a higher outcome, the Fed could have raised rates again. Either way, uncertainty rules, and not knowing what the next step is always, scary. So what I'm saying is, since we don't know what the future holds, focus on now. So why does this matter? This weaker labor data has helped the mortgage bond market improve, which in turn is helping mortgage rates trend lower. This welcome news for home buyers and homeowners like yourself. It also matters because the Federal Reserve closely monitors both inflation and employment when making interest rate decisions. When inflation is high, the Fed typically raises rates to cool spending. But when the economy starts to weaken, like now, rate cuts are often used to stimulate growth. Fed Chair Jerome Powell recently noted that a rate cut is getting closer, depending on how the data unfolds. Based on what we've seen so far, a cut seems to be a lock at the next Fed meeting, which is on September 17th. Just a quick reminder, when the Fed adjusts rates, they're changing the Fed funds rate, a short-term rate banks use to lend to each other. It doesn't directly set mortgage rates, but it does influence them, along with other borrowing costs. So if you're thinking about buying, refinancing, or just want a better understanding of the market and what this all means for you, let's connect. My information is right over here. I'm here to help. So here's my invitation. Don't just sit on the sidelines. Don't wait for a miracle headline. Let's build a strategy now, whether it's buying, refinancing, or planning your next investment. Because every month you wait, you're feeding someone else's wealth instead of your own. And that's not why you work. That's not why you labor. So I'll close with this. Your work should not only earn a paycheck, it should build a promise. A promise for your children, your family, and your legacy. So this fall season, as you're grilling and watching football, ask yourself, is my money working as hard as I am? If the answer is no, then it's time we talk. It's time to be prepared, educated, and have a strategy. Because the dragon isn't going anywhere. But together, we can learn how to ride it. And as always, have an epic day.